further, want to take a look at some stock picks I had made on the 12th of February 2013. This video is being made in September, end of September 2013. So we've had about 1, 2, 3, 4, 5, 6, 7 months since the video was made here in February of 2013. So let's take a look at how the stocks performed. The idea here is to see whether we can learn something and also see how we can learn how to pick stocks based on very simple principles. Let's begin with PCYC. Now, I talked about this stock in that February video, talked about the fact that it was breaking out here out of this cup and handle, and this was the chart in February, and I talked about the possibility of it breaking out. Now, this is a current chart for PCYC. As you can see, the pick was made here right there. That's why I talked about the stock in February, middle of February. Remember, we had what seemed like a cup handle formation and a breakout. The stock never looked back after breaking out from that level. Right now, trading as high as 140 since then. So a nice mover for us based on very simple principles. So let's go to the video I made at the time in February 2012. Here's one that, and the reason why I'm showing this is just for clarification and for picture that stocks are really on fire in some sectors. This one is drug manufacturer sector, and you see the stock has had multiple breakouts here. It might seem a little bit extended here, but if you take a look at the stock from, let me see, PCYC. If you take a look at the stock from a weekly chart, you'll see that it is forming a new base with a nice cup handle and a breakout. So it's trying to break out. I'm not saying you rush in and buy this stock. Buy point should be at about $71. If it can break out above 71, which is that weekly closing high, the stock should trade in the 120s sometime this year, even with this extended move. It's really extended, so any misstep might see a big drop. Since everybody's making money, they won't hesitate to take profits. So I would ignore that just because it's really extended, but I'm just going to show you, watch it just to gauge market health, if anything. Now let's take a look at GY, February 12, 2013. I talked about this being a breakout here. Most people would say that the stock was extended, but based on the principles and the things I follow, it looked like the stock would break out and continue moving higher, especially in a good market. You always want the market to be good. The stock had already broken out previously above that level. Also, you see a loosely constructed cup handle and a potential breakout formation. So this was the chart in February. Let's take a look at the current chart for GY. And as you can see, after this stock was highlighted right there during that breakout, so it was a buy for us right there, the stock never looked back. And it would go on to trade as high as close to $18 in about 1, 2, 3, 4 months. The stock had a nice move and still could break out down the road, but it's been basing off this current highs. Still a decent gain for those who took, my analysis and went long that name. Let's take a look at another one here. But first and foremost, why don't we take a look at how I called it when I picked GY February 2013. Now here's another one. It's a real estate play, and I believe I had this as a breakout here. If not for premium members, maybe on Twitter, but I've been watching this one. It broke out there. I'm adding it here on this list for color. I'm not saying you have to buy it, because sometimes you need to know what's going on in this space, what stocks are moving. But also, this stock is within buy point, because really the buy point is at about 11.50. No, 11.3. So let's call it 11.3. And actually, to be honest, it's still a buy, because this is week number 4 breakout. the stock is moving back above 69.10 on the RSI. In other words, what I'm saying, this is also a good stock in the same space and with a ton of momentum. This is exactly what you're looking for. A stock that wants to move higher and has a lot of momentum, okay? Now let's take a look at another pick I made around the same time, actually on the same day, same video. It was for UNXL. Why? Because I thought the stock had a nice run, and even though many would say it was extended, again, the principles that I use and I teach, very simple, indicated that should we get a breakout move above this level, this could be one to watch. The stock had already had a nice run, so you don't want to ignore stocks like this, because if they break out, they could be moving for a reason. So we set an alert here for about $17. I told subscribers if this stock moves above 17, you want to be a buyer. So let's take a look at what happened after the fact. This is now, the video is being made, or this video is being made in September of 2013. As you can see now, this was the breakout that we highlighted there in February. So that was a buy signal. The stock would go to rally from 17 all the way to about $41, $42 in about 1 to 2.5 months. A very big move in about 2.5 months. Of course, since then it's come back down. But what we are interested in this video is to see how we can time high flying stocks, because that is a massive move. And let's see how I called it in February 2013, as I thought this would do well for subscribers. And yes, indeed, the stock had a nice run. So this is what I talked about in the video 7 months ago. Let's take a look at technology, and we're going to start off with UNXL. This is a diversified electronic sector. This is your entry point here. If the stock moves back above 17.19, don't be scared of this move here that took the stock from $7 all the way to about 19 in about 2 months. Don't be scared of that, because if it breaks out again, maybe the stock has higher potential. So wait for it to move above 17.17. It's a technology name. Maybe the stock has something going on. I think it has something to do with touch screens, something like that. You can do your own research on it, but if it moves back above 17.19, then you want to be maybe a buyer, see how far the stock can go. That's how they begin. Great stocks show you their potential, they settle back, and then they take off. And you always wonder, why didn't I buy the breakout? Okay, so 7 months ago, this was a chart for Yahoo, and Yahoo was breaking out here. Yahoo had done nothing since 2006, and after it had this nice run here, this space, that period there, very nice move. We got interested in it, and we talked about this breakout there for subscribers, about 20, 20 and a half, 21, somewhere in that region. And I liked it because the RSI looked good, and also based on other factors that I discuss when I show you the video when I picked the stock for subscribers 7 months ago. So this is 7 months ago. Let me show you the current chart for Yahoo. And this is a current chart 7 months later. Of course, the pick was done here mid-February, and since then Yahoo has never looked back. Stock has moved from about 21, 2050 all the way to as high as 34 over the last 7 months or so. So this is what I said at the time when I picked the stop for subscribers. It's Yahoo, and this is not to say buy it here, but I'm just showing you that another internet information provider is starting to change its strategy. Yahoo has been a dead stock for many years, but now with all this RSI breaking out to multi-year highs, maybe in a good market, Yahoo is going to surprise a lot of sideline watchers. As long as it holds above 19.90, as I told you in the last video, Yahoo can go on to be a straight winner for 2013 and beyond. This is how they change. They go dead, they come back alive. You just have to be able to recognize when something has changed. So that Yahoo is showing us a new emerging trend here. So and you can see that the MACDs are where they should be, already broken out, pointing to the upside like they should for stocks that are on fire. Take a look at Yahoo. I'm not saying buy it here because the buy point was at 19.90, but then again, it's just, if it stays healthy, it shows that the other stocks in that space are going to be doing well. I know the video is too long, but so many stocks to pick from. Market at 5-year highs on the Dow, and also at 12-year highs on the Nasdaq. Of course, things are moving. It takes so much time just to bring you this short list of stocks. I mean, there's so many I had to leave so that you could get the best. Now let's take a look at another one, is SFUN. Now here we're going to learn something very important. Is I thought this stock would break out here in February, and so I asked subscribers to watch this in case it moves above this $27 area. The stock had a nice run and was basing here, and I thought any breakout could push this stock higher. Now I want to show you what happened 7 months later so we can learn something, and it's an important point here. I think it's a good lesson to learn here. So when I picked the stock, notice what happened here. It failed right there. This is when I picked the stock. Did not work out. In fact, the stock would go on to drop and base for the next couple of months. I would say 1, 2, 3. For the next 3 to 4 months, did nothing. But the important lesson here is anybody who knows about technical analysis, don't give up on a stock just because it's not working right now. It can always break out down the road. And as you can see in this particular example, 3-4 months down the road, the stock eventually broke out above the same buy point, which was the highest weekly close in 2013. So once it breaks out, you want to buy it there. The stock would go on to move from 27 all the way, even right now trading in the lower 50s, and it could break out again. As you can see, it's breaking out above 50. Point is here, we learned the lesson here. The stock did not work out, but there was no need to give up on the stock, because if you set an alert down the road, if it breaks out like it did here, so we might have missed it here and probably got stopped out, but don't give up on the stock. Down the road, it could eventually come and break out. So I'm going to show you the video when I picked the stock 7 months ago. Another one that is moving out, it's technology information, it's internet information service provider or something of that kind. I really like this stock. It has a nice movement here, showing you its potential, settled down for a couple of weeks. It's not giving us a buy point right now. Our entry point is 27.99 or 28. If it breaks out, you want to be a buyer. You do some research, you see whether there's something going on. But definitely I can tell from the fact that it had a nice breakout here with a nice weekly follow through there that the stock has something going on. A move back above 27.99 could flash the next leg up. Alright, the next stock here is SPWR, February 2013, 7 months ago. Now notice that this looked very good here with a buy point of just under $9, and I thought this was a nice buy. Just needs to break out, and it was breaking out. So I thought this one could do very well, especially given the fact that the RSI was trading precisely the way I would like to see them trade on a weekly chart. But now 7 months later, let me show you the current chart. This is now February, but let me show you the current chart. And notice what happened. In February, we had a nice move right there. The stock never looked back. Nice, powerful move. The stock would eventually settle down again here and base, and the buy point was when it moved above that level there of about $12 and 50 cents, somewhere around there. Another buy point. So you would have used the subsequent breakout as an entry point, and I believe we did. So there was another breakout level there. Of course, our breakout level was there, which was very successful, and another entry point there. And anybody who was paying attention would have seen another entry point also here. Needless to say, ever since this stock was picked for subscribers, it could move from about $9 all the way to as high as the $28 area. So this has been a nice mover for us in 2013. And again, same principle. So let's see what I was looking at 7 months ago when I made the pick for subscribers. All right, I want to talk about, see whether I have the right. Let me go back and talk about solar. This is TAN, one of the two solar ETFs. The other one is KWT, the other solar ETF, but it's low volume. So, you know, the solar stocks have been on fire, and I've spent a lot of time trying to figure out whether we should play them. We've missed this move here, and it seems like we've missed out on a great move. But I'm not too worried about that, because the solar sector has been out of favor for a long time, and it has not met our minimum requirements. For example, the solar space is trying to break out, but the RSI is very far away from breaking out to 3-year highs. This line I show you here is a 3-year high on the solar space. So they are not breaking out. They are not in the leadership sector. So sometimes there will be sectors moving that you'd be tempted to play, but they are not the most powerful sector. So I am choosing to avoid solar, not because I don't want us to make money, but because they have not met our minimum requirements. In avoiding solar altogether, we missed this big drop in solar that has taken 2-3 years. So I'm not feeling like we're really missing out, even though some of the stocks seem very good on the charts. Maybe this is just a short-term blip. Maybe they're setting up for a bigger move down the road. Whenever the solar space breaks out with minimum requirements, then that's when we'll play it. For now, SPWR, SunPower Corp, has a nice looking chart. You know, it moved from about $4.50 all the way to $9, has settled down for a couple of weeks, and then a nice, very nice breakout. If only the solar ETF was following through. Your entry point here is 8.73, because that's the highest weekly close there. You know, I wish I could recommend this. One of you might decide to play that space. It's a good breakout. This stock could even short-term move and trade in the lower teens before it pulls back. Who knows? Now let's take a look at ERII. This is February 2013, 7 months ago. I thought this stock was going to break out, even though the chart did not look very good, honestly, because of this very confusing action here. And I pointed that out in the video, but it was breaking out, and energy was also doing well. Another thing I have to point out here is when I was picking these stocks, I did consider market direction. You need the market to be bullish. And also I did consider sector performance. I wanted to spend time on stocks that were doing well on the sector. And energy was starting to break out, so that's why I picked this stock as a small cap stock. So this is how the chart looked like in February. Let me show you the current chart. As you can see, the stock did move, but I was expecting much more. It moved from about $3.70 all the way to just above $5. Not a bad move actually in terms of percentage, but eventually the stock would give back that momentum and base for a couple of months. The lesson here is, even though it did move after I picked it, it did not move. I was expecting it to move much farther and also sustain its move over the next couple of months. But what we got was a spike, and then it settled down again. So not a bad trade. Maybe some people got stopped out, but the idea here is to remind you that the stock did form another breakout level. It would base, as you can see, it based here for a couple of months. So use this high, this weekly closing high, as your next entry point. Very simple. Just set an alert for yourself. And down the road, in August, you see it broke out right there above, let's call it 460. And since then, it's moved as high as 780, close to $8. Just by setting that alert, this would have been another entry point. So let's see what I was talking about when I picked this stock 7 months ago, February 2013. Another energy name is not the best looking chart, but on a weekly basis, I think if you take a look at the fundamental story in this stock, you might want to take a second look. The buy point on your weekly chart is 3.83. As long as it stays above that weekly closing high, the stock could go on to double sometime this year. Let me show you the monthly on that one. The reason why it's on the, remember, I've spent the last couple of days trimming this list. It's been a long list, and you see the reason why I like it is our MACDs are trading at 3-year highs. It's had a nice move. You see that the 10-week moving average is now crossing above the 21-month moving average, something it hasn't done in, or it's never done that before. So ever since it started trading in 07, 08, stock has not had its 10-week moving average moving above the 21-month moving average. So take a look if you want a long-term idea in the energy space. Take a look at the fundamental story here. I think there's a story here, and see whether you can add this to your portfolio. DQ looked very good February 2013, 7 months ago, as it tried to break out there. Very nice, about 14 something. Nice breakout. I love the fact that it had this big move. You know, this big move here told me something was cooking in the stock. So we were trying to time this in February. Now I'm going to show you, this was a chart in February 2013. Let's go back and take a look at what it looks like right now. What you're going to notice here is DQ failed. So in February, this is where we were trying to time the stock. Notice what happened. This breakout above this weekly closing high failed. Okay, let me draw that with an. So this weekly closing breakout failed. The stock held above that breakout for 1 week and then whoop, gave back everything. In fact, moved from about $14 all the way to $4. A massive failure. But notice something here. This is what I'm trying to reinforce. The idea that don't give up on a stock just because, of course, you got stopped out, right? You got stopped out here. Okay, so what do you do about that? Don't worry about that. If you got stopped out, just set an alert here. Tell yourself whenever the next time the stock breaks out above this level, which is this weekly closing high here, you want to pay attention. And next time the stock would come, rally here, settle down for a little bit, break out, and once it moved above the area, notice what happened. It just blasted to new highs from $14 to $34 in about 3 weeks. 3 weeks, that's all it took. Okay, anybody who's been watching my videos on the angle of penetration would have known that this was going to be a screaming mover whenever it moved. Anybody who's aware of that angle of penetration on the RSI principle would have known that this is one to pay attention. Also, take note, anybody who was aggressive would have bought this breakout here. There was a nice entry point here with this breakout. After it based here for a couple of months, you would have bought this breakout right there. Let's call it about 11 or 1050, 1070. That would have seen you holding the stock from 1070 to 34 in about 5 weeks. Straight. Easy money, if there's ever such a thing. But even though it failed for us here, failure, all right, what I'm trying to reinforce the idea is that don't give up on a stock. So it failed here. Okay, it is what it is. But set an alert for that level there. Next time the stock breaches that level to the upside, you want to be a buy, because you never know how much energy is still stored in the stock. So let's go back to the video as I called it back in February 2013. Now here's some energy representation. Now this is a low. I think the average volume for this stock is about 56,000 daily shares traded, and for some reason it's had a nice run, jumping from about $3 all the way to $16, $17, and pull back and now moving again. As long as it holds above 13.16, if you want a speculative play, then the stock is really even up about 16% for the day today. So it's still really on fire. This one is one that could hit 20 or 25 short term. For speculative play, small amount of money, this might be the way to go. 13.16 is the previous monthly closing high here, and it could continue moving high, especially if those refining stocks continue creeping to the upside. So anyway, after looking at all those ideas, I hope you've learned one or two things about what it takes to pick stocks. Quite honestly, it doesn't take much. All you do need to do is make sure that the principles are met, and the minimum requirements for stocks that explode are very simple. They're two simple trades. I do encourage you to join me so we can find the next future explosive stocks. The principles haven't changed over the last 20, 10, or even 30 years. So, Eric Mwathe signing off. Good luck, guys. Peace and blessings.